Hello everybody, welcome back. It is 25 and invested here, and I am talking about everything money. I have been following these guys, let's just say for starters. I'm going to start bashing them, and it's going to be pretty quick, but I love these guys. I do believe that they provide a great process, especially for uninitiated and new investors. However, I just don't really believe that they're for the average person. And I have math to explain that, and you're looking at all the math that I need right here. So it actually took me a long time to make this video, and I went through a lot of numbers. I went up $100 per person in an interest calculator, starting at 1, 3, 5 years, and 1, 2, 3, 5, and 10 years. So at $100, I've decided that at $100 per month and at $500 per month are the only two numbers that we really need to look at, and I'll explain why I did that math in just a moment. It would really help it if you guys like the video, subscribe to the channel, and yeah, I'll explain it. Today I'm in orange, so this is me. This is my writer. I'm on sketch.io, Sketchpad. Just easy. Is everything money worth the money? So, and Bell writes it's not. At $100 a month, that's a pretty average amount for an uninitiated person. You know, I save about $1,000 a month, or at least I was for a long time. That does change often, and it isn't always the same for every person. So today we're deciding as an average investor and as an average saver, how much money do you need to purchase everything money and realize the effects on an immediate manner. And if you are able to save $100 per month and you averaged into the market to everything's money's 9 or 10%. I just did it at 9%. We're going to lowball them and give them the benefit of their own doubt here. So they always say average in at a 9 to 10% long-term average. Right now we have 19 years of data. I would say that's pretty long-term. You know, albeit you have 1, 2, 3, and 5 years. Those are considered short-term. 19 years is considered quite a long time to be investing, and that's $100. So that is without the everything money fee. So if you tacked on the everything money fee, that is $30. So you would be investing $70. And that's the math here, and that is the exact same at $500 and $470. Cup of coffee every day, right? How much is that actually worth to us? And that is, you know, what I've described here. At $100 after 5 years, you have $7,181. That is up to discretion. That is, again, at an average of 9% per year. So you're only, let's say your only interest is going to be 9% like per year flat. You know, it's not going to waver up and down. So that's what I'm taking as an average. At 5 years, you're at $7,181. At 5 years after giving them $30, so albeit 30% less investing, but you're getting 12.5%. So they are highballing. They say if we can get 1 or 2%, and they normally do on their channel 1.5%. So that is what I'm taking here. So the average, you know, their Bao writes 3.5% more than you would be making on this side. At 5 years, you are still down almost $2,000, about $1,900. That's a pretty big difference. As a matter of fact, that's pretty sizable, and it gets worse after 10 years. It's $3,000 after 10 years, but you do start to feel the effects between the 18th and 19th year. So if all you have to invest is $100 per month, just know that instead of averaging into when they say average into a well-rounded S&P 500 all-purpose index fund, instead of averaging into that, it would take you 19 years to see the effects of everything money. That is a long ass time. I'm not gonna sugarcoat it. That is complete garbage. Almost 20 years of your life, and a lot of people start investing at 30. So, I have the luxury, maybe I could afford this, but that is so long. Holy crap, And I did this at $200. I did this at $300. I did it at $4. I have the math sheets behind you, but I didn't want to clutter the whole page with useless information. Just know that at 100, 200, 300, and 400, this wasn't worth it. It would take you about between 10 and 20 years to start realizing the effects of everything money after paying them. So that $30, that $360 per year that you would otherwise have invested at a 9%, which is below the average of 9.9%, and we're taking their high of 12.5%, it wasn't worth it. You can argue here that 12.5% is low. Maybe you're expecting 14 or 15%. And you could argue that that's high. Maybe the average investor gets 7 to 9%. And yes, you can argue that. However, I'm arguing that these are the numbers that everything money is giving you. They say 9 or 10%. They always average it at 12.5% to beat the index funds. That's 25% more than the index fund. So those are the numbers I'm taking. I'm taking their low, I'm taking their high. And I'm giving them the benefit of their own doubt. And the benefit of their own doubt took us 19 years at $100, which is low. And maybe the average person watching their channel doesn't only invest $100 a month. And I guess my guess is that isn't their targeted audience anyways. I would at least hope not. Because if they were targeting it to somebody who only can afford to invest $100 a month, that's a 30% of what they could have invested. That is an absolute metric ton of money to somebody who doesn't have that much. And you need to realize that it is different for every person. So in this case, for that person who can only afford so much per month, maybe they're starting off young, maybe they're 20 or 18, and all they have is $100 a month. One, if you're 18 and you're investing, like, congratulations, you fucking made it. Two, if you're 18 and investing and you're also paying for, albeit a course or a process like this, I just feel like you are spending too much money on that process versus just averaging in at the time. And that, you get better at the process, and you could argue that. Again, there's lots of room to argue here, and I do appreciate any comment on an argument. On an objection, because there's room for movement here, and math isn't always clear cut. Again, there are situations here. We're gonna move over to the $500. So person three, actually it's not person three anymore, because I had 8 people here, and 8 different, but oh man, this screen was so cluttered. I'm glad I got rid of all of it. At $500, you are either putting away $500 per month at 9 or 10%, or you are paying for everything money and investing $470 per month, which is paying them $360 a year for 12.5%. So you are buying the extra 2.5% or 3.5% in this case. It took 10 years to see the effect here. So in this case, everything money, if you invested $500 at 10, let's say you actually got the average 10%, you would still be beating them here. So actually, let me erase that, because that is extremely intrusive. You are still beating them here. And that is not very good. Again, that does not prove the point that they are saving the day here. You beat them they beat you after 10 years. So it took 10 years again at $500 to realize. And the reason why I stopped here is because we now know that this margin is going to get a lot thinner, above $500. So we can say for sure that if you can only get 9%, that everything money will beat you consistently after that. So it took 5 years to beat you, which means that you must invest and maintain everything money at $470 on average for 5 years in order for them to beat you. That again is averages. There's always room to move. The market doesn't move based on a very consistent average. It goes up and down. But that is still pretty shitty. You're still giving away lots of money, albeit it's not bad, because after 5 years you start to see a sizable benefit. You beat $1,000 per year after 10 years, which is very good. But that means that you have to invest a minimum $470 into the market, as well as buy their course and see the full benefit of that course. So we are still saying 12%. You see the full benefit of what they said. They average it 12%, 12.5%, and that is provided that you did not beat the market average of 9.9%. Still, there's room to argue here, but it's looking still unlikely. It's looking like you need to be above 500, and in order for this, you still need room for safety. I wouldn't invest and pay for the everything money process if I wasn't also investing at least $1,000 a month. And I hold true to that, because that would give me my room for error with everything money. Let's say I don't get the 12%. Let's say I get 11%, maybe even 10.5%. Then maybe everything money might still not be worth it at $1,000. I mean, I could do the math there, but Jesus Christ, there's a lot of work that goes into trying to prove a very consistent point. And the point is that everything money is probably not worth it for the average person. The average person right now, and we're hitting a recession, is probably only tucking away a few $100s. They're probably not throwing away thousands of dollars a month, which means that everything money isn't worth it for those people. And this is the math to prove it based on averages. Fight me in the comments. This video is for you so that you can do your own math, so that you can do how much is it worth to me, and how much am I investing in the market, and if I just averaged in, would I beat them anyways? And you need to ask yourself that. This is the opportunity cost of everything money. Their opportunity cost here is $30 a month, and the $30 a month could give you the opportunity of an extra 2.5% on top of the average. So in this case, the opportunity cost wasn't worth it until 10 years at $500 for me. And your math might be a little different, but it's just a good place to start. This is a process for you guys to assess if everything money was going to be beneficial for you. Anyways, guys, hit me up in the comments. I'm going to be probably spamming this on the everything money board for a little bit, just because I think that it's important that people know if it's plausible. So anyways, guys, have a good one. Check out the rest of my channel. I do I put a lot of work into this video, but I do a lot of work that you don't see, even though there's only a little bit of math on this board. I track my portfolio on my file, and I use everything money. I don't use their process, but I don't use their paid process, but I do use them as a consideration to what stocks I pick, as well as I average in. So, the best of both worlds, but take a look at mine. I'm down, I think, 8% this year so far, which is, I think, a little better than the Wall Street Bets guys, so only a little bit. I mean, sometimes those guys really fucking show up. Anyways, I'll see you guys in the next one. Bye now.